Clear effects on crypto here. Gonna do a quick video. So things are happening. We saw that in the last video that I did. Bitcoin, which we follow, which tells us what's happening with the other cryptos, with the other altcoins, has broken above. I wouldn't say broken above. It has moved above my resistance line here. It was in this channel here, right around here, and it has broken above it. Now we're still in the day candle here, so I'm waiting for this candle to actually finish, to close, and if it closes above this line here, I'll just zoom out here, closes above this line here, then I'm looking for a buy, to place a buy order. Now, like I said, I am not a day trader. I'm a more long-term trader, investor. So I'm waiting. I watch the longer term charts, the day and the 4 hour. So if we zoom back down to the 4 hour, or we zoom in, I guess, if you want to say, we can see that several candles, and this is why I'm more of a long-term trader investor, because I haven't got time to sit in front of the computer all the time. So I've learned over the years to just kind of relax, check it once a day, don't worry about it. So here I have, it's actually been more than a day, I guess, or a little bit more than a day since I've been able to check it. So here we have, it closed out above this line, it stayed above this line and closed. So several candles have closed well above my resistance line. And so this resistance line now is a support line. So now I'm looking for the right time to place a buy order. So if I go back to my day, because that's my reliable source, I'm waiting for this day candle to finish and a new one to start, which I'm pretty sure it will start. It will finish above, it'll close above this line and start a new one above this line. But that will tell me, it'll give me confidence to place, to buy some more Bitcoin to the upside. So, and if we zoom in on the 1 hour, for those of you who are day traders, you've got lots of candles here that close above this line, and so you probably would have taken a buy trade somewhere. You had a little wick of a candle here, but this one closed above. This one opened above and closed above. You had a little wick, so that might indicate, well, it's a bit of a change, a little bit of indecision there. But this one opened again and moved solidly up here and closed here. So you might have then placed a buy order somewhere around here. Now, where would you place your stop loss? You don't want to get stopped out right away. Well, the logical place is you were using this line as an indicator as to when you're going to buy. So you would logically then, you got these 3 points here where you're looking to buy above that, or perhaps this candle, anywhere in this candle here. You're looking to place your stop loss. The logical place would be somewhere around, or maybe even just below, this resistance line. And you can see this here candle right here. It opened here at about 9:21, 22. Now if you go back to here, you can see where there was some real resistance here. Right about, if you join, you see my crosshairs in my line here, my horizontal line. You've got 1, 2, 3, 4 lines there, and even this one here you can take a look at. But what joins most of them? The most amount of lines that you can join. We're looking at, if I put it right there, we're looking at 1, 2, 3, and 4 lines. These 3, 4 lines right here. So it makes sense. And then you look back here. Where is that in conjunction with my resistance line. It's quite a well above that. And does it make sense to put a stop loss there? It might, if you really want to keep a tight stop loss. But if you want to stay in the trade, let me rephrase that. For a day trader, you might do that, because that ends up being just basically below this lowest one here, which is a good place to be. Especially considering when we zoom out, you're looking at the next target being up here somewhere, 99.80 or thereabouts, 99, even 10. So that is a nice move, right? So having your stop loss here, a close stop loss here, is not a bad thing if you're a day trader. But being who I am, I would place my trade just below this, my resistance line, because I see a lot of, remember I use the Heikin-Ashi indicator, which tells me, this guy here, which tells me that it tells me where most of the trading has taken place. So most of the trading closed out here. Most of the trading closed out here on this candle. And this one, most of the trading was down here. So when it came up here originally and hit this line, it bounced off right around here. Yeah, it did spike up here, but it came back down and most of the trading was here, most of the trading was here. So, but that tells me that if it did spike down, it would try to go down to basically where most of the trading was. Because the sellers would try to push it down, and the buyers, most of the buyers, this is where they are. And they're going to push back. So for me, as a more long-term trader, using the day charts and the 4 hours, I would actually place my stop loss a little further away, because I'm looking for a longer target, a longer upside. And so I'm going to stay in the trade for quite a bit longer. I'm not going to worry about it, right? So I would probably place my trade, see where this high point is, where it's spiked up. Well, where does that meet here? Well, it's generally right in that area that I'm talking about, where most of the trades were taking place. So I would put my stop loss probably at about 95.30, 95.29 there, both just, or maybe even just slightly below that, 95.28. And that would give me room, breathing room, for when I look out, when I zoom out to the 4 hour, it gives me breathing room, say right about there, for that trade, for that. And if you look back along that line, look back along where I am there, you can see a lot of the spikes came down to that area. So it gives me breathing room to allow this move up to have a retrace, back down, find support around here, the most recent support, and hopefully bounce off that again and move to the upside eventually. It might drag along here for a little while, but eventually to the upside. I'm giving it breathing room, and that's important, guys. You need to give it breathing room. You need to allow the markets. That's why I use the Heikin-Ashi candles, because it tells me where most of the trading was taking place. And I don't need all these other like different studies that some chartists use like 10 different studies, and to me that's just crazy. It's like, you just talk about confusion. Keep it simple. So if you look at that, say I had a 95.30, just for a round figure, 95.30, or say 32 even, just at 96.42, we're looking at a 90 pip down to the downside. But look at what we're looking to the upside, guys. If you got in right here, and it's probably a good time to get in. I'm just waiting for that day candle to complete. But if you wanted to get in right away, it was still not a bad place to get in. Or you could set a limit order for somewhere down here, maybe down near the bottom of this spike here, or this candle. Like say maybe 95 or 9600, maybe 9601. Well, before we even hit any kind of resistance, we're going to be up around here. 99. That's a 300 pip move. Well, that's pretty good. And that's not even going to be a strong resistance point. So you could just take some profits and let the rest ride. So you've already got, that's why I say the ratio is like a 1 to 3 just to here. But now we take some profits off and we're looking for all the way up to here, the top of this guy here, right? And it was, if we read it, it was 103.98 up here. We read up here. The high of that candle was 103.98. Okay? And now that's just below where I have my top of my resistance line. I have it at 10.45, basically 10.45, 45.50. So even taking it to there, and if you took some profits, if it just came below that and you said, okay, I'm out, I'm going to let it rest, see what it does along this line. Guys, the ratio is 1 to 3 from where you are, this stop loss, to this point here, somewhere around here, 1 to 3. Well, this is going to be a ratio, if you keep that same stop loss, a ratio of 1 to 7. That's awesome. So this is what I mean, and this is how powerful trend lines are. And if you find support and resistance lines, and you don't just do one line, you kind of find an area where there is support and resistance, because when it hits a resistance, it's going to bounce back and it'll create usually a sideways channel for a little while. So you want to find that area, and that gives you breathing room. Okay, guys, and as I always say, Bitcoin leads the pack. So whatever Bitcoin does, the rest does as well. So we just really quickly look at that. We're on the 4-hour. We can see Digix Dow, Ripple, or RXP, I should say it is now. Yeah, it's a real slow mover. It will follow Bitcoin, but it's going to take Bitcoin to do some real serious moves before it starts to move. But XRP tends to move really fast when it does move. Ether is the next in line of Bitcoin, and it's just following beautifully, and it's got a lot of strength there, man. It's even above the regression channel in the 4-hour. And then H bar. Okay, well, we've seen it come down here. That doesn't look too healthy, but it will. You still got higher lows. You got low, and then it dropped down here, but we're still looking at higher lows. Got to give H bar time to breathe, time to grow. Dash bar, or Dash, I should say. Power, all these other ones are all following basically Bitcoin. So there you go, guys. Happy trading, and if you like the videos, give me a like. Really appreciate it, and don't be afraid to look at my links down below. I got a few more links coming, a few more things going, and I got some things in the works. Trying to put together a web page, have more information on what I'm offering. And so there you have it. Happy trading, guys. Have a good day.